Hello everyone, a very good morning. So welcome back to Trading on Wheels with Hari. So today, as promised, I'm going ahead with my super launch control strategy in the English version, as promised to everyone. So here we go. So this would be in the English format today. So this is how the agenda goes. First, I will walk you through a PPT. First, I'll walk you through a PPT which would probably give you a brief on what we are gonna discuss and how we are gonna plan. So based on that, we will go to trading view. We will go to go charting for our previous the price charts, I would say. And thanks to Chintan, Chintan shared me his go charting credentials to use for this video. Thank you, Chintan. Okay, so let's go ahead. I will just give you a brief view on how the super launch control strategy works. So based on that, we will do some back testing, and I will even share share my Excel sheet which I use as a tracker. So that would be probably helpful, for you guys to keep a track of your upcoming trades if you're doing it on a launch control strategy. All right. So here we go. Uh, what is this strategy? This strategy is nothing but trade while majority do not even think about it. I had heard a story about or initially when you start your journey into trading, right? So you get to hear a lot of people, lot of stories. So this is where I came across this story, where one of my known person or whom I follow, that person told this. Uh, Trading is not running along with the horses, or trading is not catching a running train, or the best trades are never got during these states. So even if you get the best trades, most of the times you end up losing. So you will have to adopt the strategy of an crocodile. So what a crocodile does, crocodile doesn't go hunting for its prey. Crocodile just sits in one place patiently, calmly. It will wait for the prey to get into a trap, and it ensures it hunts the prey once it is in its trap. So, how does a trader look into this? For example, market. Market is something which is wide and vast in the wild. As a crocodile, I cannot jump out of my water, start hunting everything what I get on the open field. I will end up failing 90% of the times, probably, or 99% of the time, and 1% is when I will get my prey. But instead, we all know that at any point in time, anyone in the forest or in the field will have to come to water. So that is where you will have to sit in the water quietly, which means to say you will have to sit within your setup, wait for the market to reach your levels or your setup. So once you get those setup readily available, or when the market gives you those setup, pounce on it, ensure you grasp as much as you can. So in this way, what will happen? We will lose less and gain more. If 1% or 10% is our loss, the gain what we get is around 80% to 90%. So this is how it works. So this strategy is based on that. So what happens between 9:15 to 9:30? Most of them do not trade. I personally, when I started my career, I never used to trade in this period. So slowly I started working on this. I found an opportunity area. Then one candle theory I studied from one of the person whom I follow. His name is Tapas. Trading Legend is the channel name what he runs through. So I've been through several sessions of his working, and along with which my back testing, where to enter, where to exit. See, strategy will be same for everyone, but every individual will have their own capabilities to enter, exit, based on their mentality, based on their quick decision making sense, and based on their interpersonal skills. So if something is working for someone, it is not mandate that it has to work for everyone. So you'll have to be very careful with that. When you know there is a strategy, first work on paper trading. Not every strategy which works for me will work for you, because I might be quick or I might be slow in picking things, or I might be proactive in picking things, based on experience and everything. So what I would recommend is do a paper testing and only then go for any trades which you come across. Okay. So enter at the right time with a calculated risk. This is very important. So pounce on your prey at the right time. So when the market is at the brink, or when prey is at the bank of the water, you will have to ensure that you capture the prey and you keep it for yourself. So if there are 100 preys, it's okay. You give 100% on one prey. If you miss, it's still fine. You still have 99 to look forward for. And entry for this candle will be at the second candle or after the second candle, that is after 9:16 a.m. IST. And to trade on this, you need to have a very good knowledge on VWAP, how VWAP works, and how VWAP follows, what are the basis of VWAP. And for targets, we have a custom made fib levels, which we have for ourselves. So we work based on those fib levels. And duration of trade 9:16 to 9:45. If my trade continues in a positive trend, or in my trend, I will extend beyond 9:45, or else irrespective, if the market goes flat, I will close at 9:45 very strictly. Risk to reward ratio. So what is risk to reward ratio? As I explained, so you need to have some discipline here to ensure or to see good green number on your calendar. For example, day one of the trading, if you're trading with 10,000 rupees, so make sure you have ample amount in your backup, so that even continuous 5 days you make a loss, the 6th day you still have 10,000 rupees to invest. And every day for all the 30 days, your trading investment or the daily capital or daily invested capital should be 10,000 only. So here in this, you will be taking 10% risk, and rewards what you can look forward for is 1:1, 1:2, 1:3, and 1:4. So even if it is giving 1:2 on a regular basis, even if you take 1 day loss, that will be recovered on the second day. So that is how you need to plan your risk to reward ratio. Okay, scenarios of the first candle. So here, entry and exit criteria we will see, and what are the types of opening we get in the market. That is what we look forward for. So what are the kinds of openings? We have flat opening with a green candle, first candle. We will have flat opening with a red first candle. The next scenario is we will have gap up and a green candle, small green candle, gap up and a small red candle. See, when I say small, any candle which is formed between 30 to 40 points is a small candle for me. Gap up and a big red candle, gap up and a big green candle. So any candle which crosses above 50 points, 60 points sometimes, you will get to see big, huge numbers. So that would be a big candle for me. Gap down and red candle, gap down and big red candle, and gap down with big green candle. So when gap down happens, when there is a small candle, we usually see it, green or red on a same basis or same scenario. The way it works is similar. Okay. So this is how entry and exit criteria works. I will show this in the screen as well. So wait for the green candle to initiate above the VWAP line. So if you look at the chart here, this particular line, the red line, what you see here. So this is the VWAP line, and this is 19,200 call based on the ATM. I have chosen this 9th November 19,200 call chart. So here what happens, we have the previous candle, breaking through our, if you look at this, the red candle has closed below VWAP, and the next candle has opened below VWAP line, but it has closed above VWAP. And the next opening candle, if you look at this opening candle, this is opened above the VWAP line. So we enter somewhere over here with 10% as our stop loss from the opening of this candle. Then we keep our targets 10, 20, 30 and 40 accordingly, and stop loss very strict with 10% stop loss. So these are the several scenarios on flat, open and green candle. So we have a flat opening. If you look at this, so we have a big green candle over here. So entry will be above the VWAP line on ATM, as I showed you before. SL will be 10%. Target will be, if you look at this fib level, the targets what I go for would be around 2618 and 50% of 2618 to 3618 and 4268. So this is how I set my targets with 10% stop loss. And the same scenario with flat and red candle. You can see this. We have a flat opening here. We have a big red candle. What has happened? Market has not sustained this candle above 50% and it has gone down. In such scenarios, mostly we will get PE side as an opportunity. So next we have gap up with green or a red candle. So if you look at this, we have a gap up with a red candle, we have a gap up with a green candle. So 99% of the scenarios when we have a gap up with a small red or green candles, and it tends to follow, we will go for CE position only, because what will happen, immediately when the market opens and if the market is pushing with small red or green, which means to say decision is still not made and the market will continue in its own direction. Gap up with a big red candle. So whenever there is a big gap up and there is a big red candle which forms, I will close my eyes and I will be ready for PE side opportunity, because I know, because here when there is a big gap up, so we will have a panic selling coming from the top side. And then when there's a big gap up and a big green candle, so when there's a big gap up and when there's a big green candle, I will still go ahead with call side option, because once the market starts going up, we will see more buyers coming in to balance it out and kick off all the PE side buyers on the top. Gap down or big red candle. When it is a gap down and when we see a small red candle or when we see a big red candle, if it is a small red candle, the decision is still not made. Market will still move upwards because we do not have enough volume for the market to still push down. But when there is a gap down and a big red candle, the market will definitely go towards the PE side. So these are the gap downs and a big candle in entry and exit lines. Entry will be on VWAP, SL will be 10% or the previous candle low accordingly. Target 1 1.618, target 250% between 1.6 and 3, that is 2.6. Please make the correction. I will have the corrections done before sharing. And target 3 is 3.618, target 4 is 4.4236 fib level series. Okay, so now what do we do? So now let's go ahead and have a quick look or a back testing on how things are on the Nifty charts. Okay, let me first have this changed. Let me go to a single window view. So let's go to 1 minute candle. Okay, I will hide everything over here. I will go ahead with the VWAP indicator. So here in VWAP indicator, I would not need all these bands. So I will remove the upper band, lower band and band fills. Or the easiest way is I go with option scalping tool, but now for now it might get confusing, so I'm avoiding using the option scalping tool. So I will make this a VWAP red and a bit on a thicker side. Okay, so now let's start with the indicators and the tools. In tools, what I have is the fib retracement tool. In this fib retracement tool, these are the settings. If you want to make a note of this, probably I will pause here for some time so that you can capture all the fib level. So this is how you make changes. You go here, click on settings. So then these are your lines. Uncheck these extended line left, extended line right. Left side, keep it at 0. Keep it at 0.618, 1, 2.618, 4.236. To the right hand side, uncheck 0236, make it 0.55, make it 1.618, make it 3.618 and 1.33. Rest everything will be unchecked, right? And background level, make sure you keep it as much as to invisible for the clarity on the chart. And then probably you can name them also. You can just go here and save as, give your whatever name you want to give and save it. So I have given here TL1. Okay, then I save this. Now, so what all do we have? So for example, I will just show you. Let's go to a backtesting. Okay, so this is how the market goes. So here, let me try to see if I can increase or decrease the speed. And second, 0.5x, 1x, 3x, 0.5x. Okay, let's check the speed because I've never worked on this. Okay, it's probably it's too fast. Let's try to go ahead with 0.1x. Okay, so I think this is clear. So this is the first time even I am using, so please excuse me in case if things don't go as per expectation. All right, so I come here, I stop this first, then what do? Again, exit the bar. Yes. Okay, so now what I do, I come to the previous day candle over here. So I go to replay from here, then I go ahead with the play button. So next day we will see, okay, the market has opened here, the very first minute candle. Then I go with, let's pause it. Yeah, so we have paused this. So we have got our very first minute candle over here. So what I do, the minute I get my first 1 minute candle, I go to my measure tool in the left hand side over here. Then I mark from opening of my the first minute candle to the closing of my first minute candle. Then what I do, I take a horizontal line and I place it on center of the first minute candle. So why do I do this? Why do I place this over here? So at any given point in time, in the upcoming few candles in the next 1 or 2 minutes, so any candle which breaks or 50% and survives 25% on either of the sides, market will be moving in that direction. For me, now the market is going towards the downside, or I will probably wait for the VWAP line on the price chart. Here, for example, if you look at this, 50% is 19242. So what I will do, I will go to the chart over here. I will take 19250 call alongside. So what I do, I go ahead with 19250 put. So I don't think so done has a replay button. However, I will just show you in this chart itself. So the video might get lengthy. Do not skip because every step is important in this. If you need to capture a good number between 9:15 to 9:45. Okay, so this is the call side. So every time what I do, I keep this keep both the charts side by side. I enter based on the VWAP line suspension. So here what I will do is I will just cover the 5 days backtesting. Then you can go ahead and have your backtesting done on your systems. Okay, so here if you look at the first candle, it is below VWAP line. Second candle below. Third candle below. Here again, first candle below VWAP line. Second candle opened above VWAP line. So in this scenario, I would have entered over here. The minute I enter and I see, I will not wait for 10% over here. Again, as I said, you should be very vigilant about your trades. The minute the very first candle does not sustain the VWAP opening, and you see a big candle going below VWAP, I would probably keep the entry candles low as my stop loss and I exit. So here I would have taken an exit. Let me repeat this again. So what will be our entry point? Entry point will be when the VWAP line opens, or we have a candle opening above the VWAP line, we enter in that particular candle. And if we see that the candles do not sustain, then what we do, we go ahead with the previous candles low as a stop loss. So here, that is where we got our 10% stop loss and we exited out of the trade. You can check this out. Here we come and here we go. Sorry. So here the previous candles low will be around 13%, but what will be our stop loss? 10%. We do not compromise on this particular criteria. So the very second candle, we take our SL, we get out of the market. So after third candle, where do we see another entry point? It is on the call side. So what do we do here? So we enter into the call side opportunity. So you will have to be very fast and very quick here in taking your trades. Again, what you do, you go ahead with 10% as your stop loss. The minute you enter, you will have to go ahead with your 10% stop loss. Always remember this. And first 10% we have already lost. We have just left with another 20% to trade for today. So here you go, and when you know the market is flat, when you see these many candles over here, so market is going, it is coming, it is testing your entry point again and again, which means to say very less time you have to book your opportunities. If I see such scenarios, where the market is not taking a flight, I will mark my 10% as my profit, or I'll trail my profits from 5% to 10%. I'll take an exit. Okay. So this is how it works. So here, what do we look for? The targets. Where do we look for the targets? Once we enter, so we come back to this particular line, the 1 minute candle. We have already divided the first candle by 50%. Then we go to our fib level. So what we do, okay, here we will wait for the VWAP line suspension. Okay, at this point in time, the third candle, I got to know the VWAP has gone above and it has taken a direction of CE, and I have already entered CE place. So what I will do, I will come back here. I will go ahead with 50% and draw my fib level to the bottom of the first candle. All right. So here, what is my first target? Always 2.618 is my first target. Second target, 3618. So that is the third target. And the second target would be 50% of 3618 and 2618. Why this? Because there are high chances where markets might get reversal from the second target. And the fourth target is 4236. Now let's play and see if we get our targets or not. All right, the market is still sustaining above the VWAP line. 2.618, the first target. The second target also we have almost achieved. This is the 50% mark line. So this is our major reversal area or breakthrough area. All right. So here, what are we gonna do in this particular scenario? So we saw the market is very it's not directional. So it is still taking a sideways over here. So I would have probably exited with 3.618. In sideways market, usually 3.61 in the regular market side, I mean 3.618 should give me 30% and 4.236 should give me around 40% plus. But here, due to sideways market or the market not taking any directional move, so the targets we would have achieved around 10% at 3.618. So that is what we have seen over here. So post this one high, the market goes down. Okay, so this is clear. So now what do? We go with the next kind of next back testing. Let's close this. How do I close this? All right, so over here. Ta-da. What happened? Yeah. All right. So now, so what do? We go back to, I don't know, it's taking some time. So when do we go back to? So we go back to 2nd of November. All right. So let's go ahead with replay here. Okay, 0.3x. Let's play. All right, pause. So what I do here, I go ahead. First, I take my measuring scale. The first candle high to the first candle low, I mark the 50%. Go to my horizontal line, draw the horizontal line, and here the very second candle I see crossing the VWAP line. So what I do, the minute I see this 19123.05. So now let's go to go charting, because the previous expiry we will get it over here. So again, thanks to Chintan for sharing his credentials. So let's go here, charts. Let's go to Nifty 50, and here expiry, it is 26th. No, it was second expiry. Second was the expiry day. And what is the chart we have here? 19,230, in the sense 19,200. 19,200. So here I will go ahead with 19,200 call side. Not sure why this chart is not showing. Yeah, it's showing up now. So how do I hide everything? Just give me a second, guys. Okay, let me hide these. Cancel these also. Okay, so let's go to the normal charts. Candlestick. All right, so here, so coming back to 1 minute candle on this, on 2nd of November, if you look at this, 2nd of November. All right, so here let's go ahead with the FX study, just the VWAP line. All right, so here, so when I look at this chart, right, so where do I have my entry? If you look at this, the entry where I have got on this particular candle is somewhere over here, right? So what I do, I go ahead with the long position. I take my entry over here on this line, and I'll go ahead with 10% as my stop loss. Just let's check this, around, yeah, 10% as my stop loss, and I'll just wait. So here, if you look, we almost got 30% target. Do you see this? Let me expand a bit. Yeah, you can check this out. So what is the percentage we have got here? We have got 30% target. Now, so how did we get this target? Let's get back to our Nifty chart. Now here, Market is going up. What I do, I go with my fib level. I'll from 50% to the low, I draw, and first I will go ahead and mark my resistance line. So most of the times, first you have to take an entry and then you'll have to come and do your research over here. Then what I do, I go ahead and mark my targets. This is 2.618, or probably I'll watch. I'll not even mark. I will just wait for. This is for new people who would want to put marking and then wait. I usually just look at the fib level and I take my calls to exit or not, because once I enter, I don't go to the charts to keep looking at them. I have my OI, the one click, which would be actively running on the right side of mine. So I'll immediately go first set my stop loss. Then when the market goes to above 3.6, I will just check for the percentage and I'll go trail my stop loss to 15%. The minute it goes 4.23, I will set it for, my target would have already been set for 30% or 40% based on the movement. Okay, so if you look at my previous video where I have captured this particular trade, so 30% I had already set. The market just went, touched 30%, and it was closed. Okay, so let's see what is the target it's gonna give us. All right, so 2.618 touched. Again coming back, the market is trying to sustain at the VWAP line. Next candle again above the VWAP line. Market gave us the second target also. It has moved above second target. It has given the third target also. So here 931 is when we have got. So 931, let's wait for 931. 931 is over here. So it would have given our targets and we would have exited out of this particular trade. If you look at this, it is almost touched 4.236. That's our target. You can check this. So the minute it comes here, what's the time? 9:40. 9:45, we are done and we are closed with the trade. Okay, the second backtesting is done. So now let's get back to the other charts or number. The same expiry days. 2nd November is done. So after 2nd November, let's go ahead with let's check for any gap down scenarios. Again, as I said, trailing your stop losses and ensuring you do not give anything to the market is up to you. How you want to plan your trade and have your trades done accordingly. All right, so this would be another good example for a flat market opening. So what did I say? Flat. Again, there would be flat. During time of flat, you might get to see retracements, right? So retracements would be an opportunity again. So now let's go ahead with replay from this particular candle. All right, so let's go with play. All right, the very first minute candle, we saw a big red, so we pause over here. So what we do, so I go ahead, the very first minute candle, I just draw this into 50%, take an entry over here, 19.62. So what I do, I immediately go to my charts, then I will go ahead with 19.62 in the sense 1900, 19,000 CE. Oh, I think I'll have to go from the beginning. Let's check this out. Okay, so here I go, Nifty 50. Expiry would be again the 2nd of November expiry, 1900 CE side. So let's go to 30th no, it was not 30th, right? So gap down scenario, flat and a gap down. Yeah, November 1st. All right, so we come here. How do I delete this volume? VWAP is here. Where is the volume one? Volume, yeah. All right, so volume is hidden. All right, so we come here. So what we do, we patiently wait on call side and put side both. By then you would have got the direction. So what you would do, here the market is coming up. So how do you decide how to go? So what you would do, you would go with the fib level series. So when you see the second candle coming up and it is not going down, so you will go with the retracement. First you will check if it is crossing 0.56, 0.5 to 0.6 or not. In the meanwhile, you will still keep checking over here which side entry do you get. So what I would do is, most of the times I will take entry and then I go do the markings on my candle. So here I get my entry here above the VWAP line, that is around 120.95. I enter into this particular candle. Immediately what I do, I set my stop loss to 10%. Then I come back here. Now I got to know the movement is upside somewhere. Then what I do, I mark my markings. 2.618 is on the top. The market is already at the zero level. So when the market is at the zero level, then my targets would also change accordingly. I'll just show you guys. So in such scenarios, 0.5 in case if it breaks, 1. So 1 is nothing but 50%. In case if it breaks 50% also, then I would go with 1.618. Then my targets will start from here. First target, second target, third target, why? Because these are the bounce back scenarios. When market opens flat, when the big red happens, it's a bounce back scenario, because of which we go ahead with these numbers. Now let's see how the calendar goes, how the chart goes. I've played. Okay, market broke 0.5, 0.6. It sustained 1. It is sustaining 1.33. Sustained 1.618. Sustained our open high. So this is how the indices looks like. But when it comes to our charts, so what we do, what will be our targets? So we work on targets basically, right? So what do? We check for our targets. Here 15% is the target. How do I capture this 15%? Again, every time I cannot wait for 30%. So what I do, I set my target in OI in one click to 30% in the target place, and in stop loss. So what I do, the minute the target goes to 10%, for example over here, the minute it reaches 10% over here, what I do, I will move my stop loss to 5% above this particular line. Or else most of the times the effective ones, what I do, I will probably tell you what is the way I follow. You can see if you can do it, but again you'll have to be very fast and very quick in taking decisions in this particular candle. All right, so the very first candle, it took off. So what I do, I go here 121. So 122 I keep my stop loss, which is the opening of the next candle. Then so we have this particular candle opening, which is on the top, right? So what I do, I'll go ahead, I will divide this previous big candle, this one. I divide this previous big candle into 50%. Into 50%. So that is around this level. So around 126, 127 is where I move my stop loss to. And when this candle opens, and when I see this candle is not making any further up movement, So what I do, I immediately go ahead, I move my stop loss to the opening of this particular candle. So if you look at this, what is the target we have achieved over here? Around 8.45%. It would have taken our trailing stop loss and it would have gone. So we should always remember this. So whenever in the up moving direction, so when we have 50% retracement on the very first candle, when we have a big moment, there are chances where continuation of red candles might come. All right. So if you would have probably missed that, it would have taken your, no, it wouldn't have taken your stop loss, but it would have come down. It would have been in red, and then probably would have got your during the time of retest. Again, you would have got your 10%, yeah, whatever targets you would have set for. So here I stop my VWAP trading for this particular day, the very first trade. So let's again close this. Let's test the other, the last test we will do. So we will check another gap down scenario. So we have just checked for the gap up and flat scenarios. Let's check for a gap down scenario. You can do your back testing. I'm sure you will get to see a very good result, or I would say at least 80% probability is where we would have taken a win. Okay, here we have a gap down, so which is 20th of November. So if it is 20th of October, so if it is 20th of October, then September, October 20th, then expiry would be for 26th expiry. Okay, so let's go ahead with this 26th expiry. Nifty 50 26th expiry 19,000. Okay, here I'll go ahead with a replay from this point. Okay, so let's replay. All right, the first candle formation is done. Let's go on pause. We go with our first separating or dividing this particular first candle into 50%. So we divide. So here if you see, immediate the second candle is above the 50% of the first candle. Immediately our view changes to call side. Always remember this. Now we go here to our charting. So here what is the number we have? 19,540, which means to say we go ahead with 19,550. So 19,550 call side. So when is the date? 20th. Friday the 20th. All right. So here in such scenarios, right, if you're not fast enough, what's going to happen? So in such scenarios, you will wait for our VWAP. There will be failures also, right? So this is one such scenario. So where we go ahead and we take a position above the VWAP line over somewhere over here, and we set our stop loss to 10. Has it given our target, or has it taken our stop loss? The answer is it has taken our stop loss. But what do we do in such scenarios? Again, your fast, or the way you trade, the way you have your expertise on your trading style, everything matters, right? So here we have entered when the market is not going above your level, right? So market comes down once and it doesn't fall down every time. If it has not taken your 10% in the first instance, and when it comes to your cost or above, the minute I see it coming green, I will book. I will not wait for the market to still take off from here, because if it has already gone down below almost towards 10% of mine, there are very less chances where it might break through and go with the volume. And you'll have to look at the charts also. So if you look at this, what I would have done, it's going towards the call side, so I would have just gone ahead. I would have made my movement towards call side. This 50% is my rejection or reversal area, and these are the targets. So what I would do, I would eagerly enter and I will wait over here. So what is market doing? 1.618 it crossed. It's going towards 2.618. Did it reach 2.618? Let's wait and watch. The very first target achieved. Let's see what the market has got to do. So if you look at this point, we have almost achieved our, did we choose a wrong strike by any chance? No, I think we have chosen the right strike. On that day, probably the premiums didn't go the way it was expected to be. So let's just check and wait. This is 20th only, right? 20th of November. Was it November, or which date is this? No, this is October. September, October. Yeah, October is what we are looking forward for. Yeah, October. So if you look at this, first, second, third, fourth candle is above the VWAP line. If you look at here, it's the third candle which is above the VWAP line. So again, if you're quick enough, fast enough, you would have probably entered over here and we could have grabbed 10% and we could have exited, but which is not the case. We stick to our rules, right? So again, if you look at this 20th of let's play again. Let's see how the market behaves. On this particular day, I had taken 10% SL. That is what I remember, because post this market went, kept going down. So again, as I said, this is a reversal zone. So this is a perfect example, at the reversal zone, when reversal happens, what are the big targets we might achieve. So post 9:45, I will go with the 20 MA strategy. I would probably go through that some other time. So here, did the market go above our target? The answer is no. Even if we had a movement, but in the price chart, if you look at the price, it was fluctuating. It was below this. It has given our targets, or it has given a good move, but not as per our setup. This was one of the failed scenarios in the last 5 testing what we have done. All right. So that's the reason I said out of 8, at least you can expect 2. So if your luck is bad, or if the days are not according to us, and the very first time you enter, you take 2 stop losses, you would have lost 40% of your capital. That's the reason I say, if you have a 10%, 100% capital, out of which use or deploy only 10% of your capital for your daily investment, and have 20% stop loss in that first one, to ensure even if the first 10% goes, then you still have another 10% to recover that, or to have a good numbers achieved. All right, so I hope this is clear. Let me I think we are almost at 48 minutes, so I'll not take much time. So I'll just walk you through the fib level again, so that you guys are clear on the fib level. The other part, I think it is almost clear. I have just made that I have ensured I've covered everything in that. So here someone were asking me in the previous strategy also, previous session also, what about the downside? So whenever the market goes downside, what we do, the first we divide this into 50%. So if you feel the market is going down, all you have to do is you'll have to take the fib level from 50%. You'll have to mark it towards the top side of the market. And if the market is going down, you'll have to move it, going up, you'll have to move it towards the bottom side of the first minute candle. and your targets would be 2.618, 50% of 2.618 and 3.618, that is this line. Third target 3618 and fourth target is 4.2.36, 4236. So stop loss is something which you guys should be very keen upon. 10% is the stop loss. You cannot afford to go beyond that. So I'm going with this. So this is the Excel sheet what I have prepared. All right. So for example, here you say you have your capital as 1 lakh rupees is your capital, and your daily deployment should be automatically, let's automate this also. Let's multiply by 10%. All right, so it would be around 1000 rupees. So for example, let's go back from 5th November. So let's go back with let's go with the dates. I'll let you know. Okay, so when is the expiry? Today 9th is the expiry, right? So yesterday was 3rd October. So after 3rd October we have 5th, 6th, 4th, 5th. Today is Sunday, yesterday was 4th, so 6th October. So this is just a back test, I mean testing we are doing. 1 2 3 4 5, so 1 week. So this is a 1 week result what we are looking forward for. Okay, so this will be day 1, day 2, day 3, day 4 and day 5. So what is your initial investment? Initial investment is always gonna be your 10,000 rupees if you have a 1 lakh capital. All right, Control Z. So let's mark this as okay. So it will not change, it will remain constant. All right, so this is done. So once we have our 1000 rupees investment for every day, for example the very first day, right? Did you hit your target 1? The answer is no. No. Target 3 also we didn't hit. Target 4 also we didn't hit. Did we hit SL? The answer is yes. So what is the loss you have? What is 10% of 10,000 rupees? It is 1,000. All right, so minus 10,000 is your loss on this particular day. Then you leave your comments or remarks, what happened, what not over here. Then again 6th October, I'm taking this on the real numbers. 3rd October we took a loss. Monday, for some reason we don't again, what will happen? Out of this 10 lakh whatever, 1 lakh whatever we have, I will add 1000 to this 9,000 rupees over here, and I will make this as 1000 rupees. So here on this particular day also the answer is no, we will not get any of the targets, right? And then we hit our SL. So again minus 1000 rupees is gone, that is 10%. So again we have here 9,000 rupees left. So in the next day, out of this 1 lakh we withdraw another 1000 rupees. So we have already withdrawn twice from the actual capital, so we make this as 10,000. For example, some bad reason you lost this particular trade also on the very third day, right? You lost this also, minus 1000. So you're gone. So now what is the capital you have lost? The actual loss you have made, it is just 3% of your 1 lakh capital and 30% of your daily investing capital at the third day. So fourth day again you will withdraw 1000 rupees, you will add it to your account, and you will make it 10,000 rupees. On this particular day, during your trailing stop loss, you hit your 20% target. The answer is, did you hit a loss? No. What is your target? What is the amount you have achieved? 2000 rupees is what you have achieved. What is the percentage? 20%. What is the amount you have now? 12,000 rupees. What do? You push the 2000 back to your capital. Push 2000 back to your capital. Never trade with the gained profits. Push it back to your capital, and you're still pending with 1% of your capital loss. And not every day is gonna be this setup, as I said, it is 1:2, or it is like 8:2. 8 times you might win, 2 times you might take a loss in this particular strategy. This is my backtesting data, what I have. Here also, you probably, on this particular day, the market movement is really nice. You set your target for 30%, and it's not taking for some reason. So here again, you go with no. Here again, did you hit a stop loss? The answer is no. What is the percentage? What we have got here is 3,000 rupees, right? 13,000. So you move your 3,000 back into your account. So what is your capital now? It is 1,02,000. So you're 20% ahead of your profit. So again, 9, 10, 11, 12th October. 12th October to 5 days over here. So if you look at this, we are on the 10th day. What is the capital? Capital will still remain the same. So what is your profit or gain? If you look at this, 2,000 is your profit. So what we do is, let me help you guys with this also. I think it's gonna help. I never thought about this. I think it will be helpful in case if I can help you guys. I would mark it, I would call this as PNL. Okay, so which would be all right. So I think this is done. Yeah, so this is your PNL. What let me mark this as green. Okay, so what we'll do in case, let's do this also, in case if this is greater than 0, market green. In case if this is lesser than 0, then we will mark it red. Okay, so this is also done. So now we are at 2,000 rupees profit. Now to take out your profit, okay, for example, today you know that 2 days you have won, and now you have 1 lakh rupees capital in your savings. Now what you will do, you will have that greed. So you will come back, and what you will do, you will increase your capital to 30,000. Okay, you will increase your capital to 30,000. Did you get your first target? Answer is no. Did you hit a stop loss over here? The answer is yes. Okay, what is the 10? What's the 10% of 30,000? It is 3,000. So 3,000 you have lost. So you took 5 days on a continuous loss, where you made 2,000, 3,000, 20,000, 50% you made, but you still lost it. Why? Because you increased your capital, which you are not supposed to be doing. So here, what will happen? It's already gone to negative in one single trade. If you would have just tried with 10,000, then what would your loss have been? It would have been minus 1000. Your capital would have still been at 1000. By looking at these many numbers, for some reason on day 7 you decide to go with lesser quantity. You go with 5000 over here. On this particular day you go with 5000. But here if you look at this, you will achieve your first target, you will achieve your second target, you will achieve your third target also. Did you take a stop loss? The answer is no. So what is the target you have achieved? 1500 rupees is the target what you have achieved, 30%. Here you had an opportunity to make 3000 rupees, but you still ended up. Why? Because of the fear of having these many reds in your chart. So if you would have kept this constant at 10,000 rupees, then your target would have been 30%, that is 3000. So you would have been at 4000 rupees profit. And now for some reason you had all your bad experiences. Now you consider to be consistent in the next 2 or 3 days. So again here the answer is yes. You might just get 1000 rupees profit on this particular day, 10%, and the next day you might get around 20% profit. Okay, so here on this particular 16th October, right? So even if you take a stop loss of 20%, trying to because you have good number of I would say profit already accumulated, then what you do, you go ahead with your 20% target of your stop loss. Then what is the 20% of 10,000? It is minus 2,000. You still have 5,000 in your wallet. So what is the percentage gain with this probability? What I put on the chart, if you look at, is somewhere around 5% of your capital and 50% of your daily invested capital. So this is the power of managing your capitals accordingly. For example, 16th, 17th, 18th, 19th October. Let's calculate for the complete month how it looks like. 3 to 5. Okay. So what is the day? We will 11. Okay, 15 days. So capital still same 10,000. So we will go with a probability. Let's go with probability of just 10% only on a daily basis, or one day we will have 20%, and one day we will take a loss, I would say, out of 5 days. I would mark this as yes for stop loss. This is no over here, no over here, and no over here. Okay, and on Friday again you take a 10% as your target, right? So here, did you take a stop loss? The answer is no. So here, what is the percentage? 10% is what you have taken. Here again 10%. Here 20%. Here again you have minus 1000 loss. Again here you have 1000 as your profit. So what is your capital? What is your profit and loss? 9,000 rupees over here. 23, 24, 25, 26th October. Right? Again 3 to 5. 30th October. Okay. The very first day you will lose your stop loss. Answer is yes. The second day you take your stop loss for some bad reason. You take a break on this particular day. You don't do any trading over here, and immediately you come back on this particular day over here. Yes, then the answer is you make good profits over here. Just consider you just make 1,000 rupees over here, or make 20% on the last day. 20% is easily achievable provided we enter and exit very good form. So 10% we have taken a stop loss. Here we do not trade. So here minus 1,000, minus 1,000. Importance of having stop loss consistent. Okay, here did we take a target? The answer is yes. How much did we take? The answer is 1,000 rupees. Here it is 2,000 rupees, right? So with 10,000 investment, all right, so if you look at the probabilities over here, with 10,000 investment, right, how many losses you have? 1 2 3 4 5 6 7 8 losses. 3 sorry, 2, 5, 8, 9, 10, 11. 11 wins. 11 wins, 8 losses. Still your daily capital is come to 10,000 rupees, right? With capital of 1 lakh. What is the percentage? It is 10% of your capital what you have achieved in a month. And if someone says this is not good, trust me on this. This is the best simple way where you can save your capital, make 10%. 10% is a big number, guys, for a monthly basis. Again, if it's a proper trading, 10% is a very big number. If you consider it like a gambling, then this 10% you can do it in one single day. For example, over here, right? So you for someone who says no, I would want to go with my full capital. So what would you do in such scenarios? I'll just convert this into, or let's do this. So let's have this as Control Z. Okay. So for example, if I'm using the complete 1 lakh over here, so what would happen in that scenario? So if I'm using complete 1 lakh over here in this particular trade, again I'm left with just 1 lakh, right? So rather than risking your complete, sorry, you will not have anything to just give me a second. I think I just missed something over here. Yeah. All right. So let's make this as 1 lakh. This is just for your calculation purposes and nothing else. 2, 3. Okay. Now you lost your 10% bit, or else probably I would go ahead with 10% only. How do I show this to you guys? Okay. This is my first time, so please bear with me. So let's delete all this, which would be of ease. Okay. Okay, I've deleted these. Let's keep the same numbers over here. So 1 lakh is the capital what I've kept here. So in case if I'm losing 10% on the day 1, so what is the 10,000? 10,000 is gone on the very day 1. So what is my remaining pending amount here? 90,000. So on the day 2 also I make a loss. What is the loss? Loss is minus 9,000. Okay. So what would this be? This would be this plus this. All right. I have 8,100 rupees in my hand now. On the second day also I make a loss. So that is 8,100. That is 81,000's 10% is 8,100. On the fourth day, what is the capital I have with me is 72,900. So I go with 72,900. I get very over here to 20%. So 7272 around, which is equal to this multiply by 0.20, 20%. So that is around 14,580 is what I get over here. So what is my capital now? 87,480. So do I get 30% over here? The answer is yes. So on this particular day, I make 0.30, 30%. So what is the capital I have now? I have around 1,13,724. Do I take a stop loss? The answer is yes. On this particular day, I take 20% stop loss. So that is minus 20,000. So what is the amount I have with me now? The answer is 93,000. Here again, I take 20% profit. Here I come with 20% profit of, let's make this a deal, which is equal to this multiply by 0.20. Okay, so what I have is 90,000. So I make 10%, 20% out of this on this particular day, which is equal to this multiply by just 10% again over here. So that will be around 10,000 something change. Again 10%, 20% over here. I think this is not working out, so let's go ahead with what we had prepared first. All right, so what I'm saying is do not risk your capital. In case if you're someone who says the initial capital, you can still work with it, go ahead with it, or else I would say do not risk your complete capital. Use 10% of your the actual capital what you have, so that you do not lose out or wipe out on complete money, even in case if you see continuous 5 or 10 days continuous losses over here. So with my experience, what I've learned is the lesser you lose or give to the market, the more you can sustain in the market, or the more you can stay in the market. The minute you give out everything, you lose completely. That is, in case if you stick to this 10% stop loss or 20% stop loss in a day, it will be very beneficial, or else it's going to be a tough time to retain your capital. I hope this is clear. I have my YouTube channel also. Kindly subscribe to this YouTube channel. So I would share my daily analysis, weekly analysis, and I would also share my trades, where I take my trades, how I take my trades, how I do my trailing stop loss. These are the things, what I would probably share in the YouTube. And I would want to let you guys know that I do not charge anything. I'm not here to make money by coaching or giving some information, and I would stick to this, and I would not deviate from my words even today or even in the future. So I will not be encouraging any kind of a payment wise training or coaching in this trade market. Why? Because this is not a rocket science. If you look for these strategies, or if you look out for any kind of a strategy, you get it in YouTube. So the best practice is what I have acquired and what is working out for me, sharing that information which I have gathered from the social media, and I have reconciled it, and which is working for me. There is no point charging for such knowledge, is my perception. And using this particular formula, in case if anyone is making a good number, I would request you guys to share your views with me, so that I would be happy, and I would it would motivate me to come ahead and make many more such videos in the future. So I hope this is clear. I will be sharing this particular Excel sheet along with the PPT what I have prepared, and my YouTube channel, and also my Instagram channel. Kindly subscribe and help me grow. The day I have 1,000 plus subscribers on my YouTube channel, I would be going ahead with coaching or the basics of trading at zero cost to everyone, and which should benefit everyone. So that is my intent of making videos. I hope this reaches many people, and I have this particular video I have kept it in English so that it benefits everyone. But my primary focus would be for Kannada, because we have very less folks who coach in Kannada, and my target would be more Kannada audience in the future, along with others also, because it's a mixture of English and Kannada what I would be talking. So I would request everyone to spread a word about this particular channel and help this channel grow. All right, so thanks everyone. Have a very nice day and a happy weekend. Bye bye.